You're listening to BFM 89.9, the business station.
Childwood, High Five and Nirvana Memorial Centre are some investments that this regional investment group has made. Its differentiators with other investment firms include an in-house new media team as well as a boutique financial advisory, not to mention partnerships with the son of the former Finance Minister Tun Daim Zainuddin, as well as with a former chairman of Proton Holdings. Yet its record in listing Chinese companies in Singapore can be questioned due to a plethora of corporate governance concerns, while a slowing global economy might hurt deals, as evidenced by the recent high-profile scrapping of IPOs in Singapore as well as in Hong Kong. Datuk Jared Lim, the managing director and co-founder of the boutique investment banking and financial group, Asiasons Capital Group, welcome to the Breakfast Grill. Now, Jared, has said that you founded Asiasons together with Datuk Muhammad Azlan Hashim, as well as with the chartered accountant Ng Teck Wah back in 2007. How did the group get together, given your age and cultural differences? What were the circumstances behind how this collaboration began?
Yes, we do have differing backgrounds, but it's worked to be very complementary in our investment business. We've known each other for past 8 to 10 years now. Teck Wah has been a former founding member of Arthur Andersen, which eventually became Ernst & Young, and he's always been the chief rainmaker in Malaysia.
In terms of getting deals in and stuff.
Yes, so as a result, it's inevitable that if you're doing deals in Malaysia, you would meet him, and we've worked together for the last decade or so. And Datuk Azlan, we actually met through a very good mutual friend during his tenure as a exchange chairman, and we had many opportunities to sit down together and share our thoughts about the investment industry in Malaysia. And we had been talking about how it was really dominated by foreign-owned private equity funds, and typically led and managed by Western professionals. And we thought maybe it's high time to build a locally owned and Malaysian-grown private equity fund that had basically indigenous management that better understood the cultural similarities or dissimilarities amongst the countries in the region. And we thought, there was an edge or an advantage in setting up this fund.
Hence the name Asiasons, or rather Sons of Asia. Now, in terms of the investment fund's focus and the thrust there, what's the investment philosophy? What's the typical focus that you normally buy majority? If you don't, again, spell out the ideas for us.
Well, in terms of sector focus, we are not generalists, so we try and focus on two main sectors, which is really the consumer sector and the resource sector. And we prefer to take a majority type position. That enables us to exert a lot more influence, and we have a very specific value-added framework pertaining to Asiasons. And that's really what investors put their money with us for. We do also take minority type positions, but in those cases, we tend to spend a lot more time understanding the compatibility with the partners. We try not to be just capital or fund providers. We position ourselves really very much as business partners with these companies seeking capital, and I think it's worked really well. They see a lot of value add from us, not only in terms of helping them to take them regional, but the fact that we have our own in-house creative shop that brings in the design expertise and online web strategy expertise, as well as our own boutique in-house investment bank. That really helps to give them a lot more tools to help build their products and businesses.
Okay, we're going to discuss those ideas in terms of differentiators in a few minutes. But in terms of background, you've actually got two funds out there. You've closed the first fund with about $100 million, and then you're right now in the midst of fundraising for the second fund, which is about 250. So eventually you get to $350 million in assets under management. Give us some idea in terms of originating ideas. Where do you normally get them from, and the sources of?
Yeah, well, over the actually since we've started in 2007, we've built a very strong base of business connections. But obviously, even before that, Individually, we are very strong deal makers and we have very strong relationships throughout the region. So, our deal flows come from different channels. An obvious channel would be from our investment bank, and they've been in the industry for a long time as a regional player. The other channels are really our individual relationships, as well as from a whole bunch of consultants and bankers whom we've known well and we've built the relationships over the years.
Okay, now your first fund, it's public knowledge that you have announced an internal rate of return of about 38% a year. That's about said to be 2.3 times your initial cost of capital. When you go out there fundraising for the second fund, which is 2.5 times the size, $250 million, what's the promise?
We have a target IRR of 25%. We obviously hope to achieve far better than that. And so far, the start for the second fund has been pretty good. And, I think it's a pretty good start.
Okay, now, as we understand it, you've got about 9 active deals right now in terms of portfolio. You've exited 3 fully, you've listed 2, and 2 have been partial exits, which means you still own some shares in them. Talk in terms about how they've done individually, some of the stellar ones and some of the not so stellar ones.
Yes, it's a portfolio, so by definition, some would be doing better than others to give us this average IRR. We've had investments that do they've done as well as in excess of 10x.
Which one was that? Can you give us some details?
It's this company now that's listed on the Singapore Stock Exchange called Lion Gold, and that is the largest gold mining company listed on the Stock Exchange of Singapore. And today they are a Morgan Stanley Composite Index stock as well. And we're still very much involved with them, trying to basically grow their production.
Okay, so 10x would be 10 times your initial cost of capital, which of course would be a runaway hit. Well, what about what's been the worst deal you've done, Jared?
It's not a coincidence that the investments that we've made that didn't really pan out have been A, minority type deals, and B, unfortunately, it's been Chinese related deals. And these deals were really done pre-crisis. And, the Chinese market was very, very hot and promising at that time. But unfortunately, having a minority position and going into the financial crisis in 08 and 09, we didn't have enough leverage and influence to really work with them to work through the crisis. So really, unfortunately, we've realized some of it, and we haven't lost money. But it's not been a stellar hit. Okay, we're going to discuss those ideas, the whys and the wherefores, when we get to the discussion on Westcoop, or rather your investment advisory. But right now, we're going to talk. You've described Malaysia as a hotbed of business innovation. Let me say that again, because there are many words used to describe Malaysia, corporate Malaysia, but innovate is not one that is commonly used. What did you mean by that? Yeah, there have been quite a number of people that have expressed surprise at my statement. But in the course of the last few years of running this fund, we have seen and come across so many brick and mortar businesses that have really innovated beyond their basic business model, and it's very admirable. I suppose that's one of the beauties of working in private equity industry. You really get to understand how enterprising and innovative some of these businessmen are. And Malaysia is really, a platform that's grown a lot of these, amazing, budding, innovative entrepreneurs.
Well, one example would be Nirvana Memorial Centre that was listed until 2010, but then you bought it. You bought 30% only, and you took it off the boards, right? And they have basically innovated bereavement. Just very quickly, tell us what you think that they've done so well about innovating in bereavement.
Yeah, Datuk Kong and his family, they are, one of the prime examples. They basically revolutionized the bereavement services industry and reinvented the business model. So from a simple business of just selling a cemetery plot or a tombstone, they've really refined it, and it's evolved into becoming a recognized investment product. And today you think about buying insurance products, you think about, investing in the stock market, and there are even some very young people that have come up to me and say, hey, I've bought a Nirvana investment product. So really for them to have transformed this industry to this stage of being recognized as an investment product, and a bulk of their revenues are really what we call pre-need, because it's basically sold as an investment product. It's really amazing, it's very admirable how they've done it.
We're talking to Datuk Jared Lim, the Managing Director and Co-Founder of the boutique investment and financial group Asiasons Capital Group. After this, Jared, we're going to get your views on doing business with the son of Tun Dayame, for example. We're going to talk about things like capital raising as well.
Brilliant financial mentors. BFM 89.9.
This morning, we're talking to Datuk Jared Lim, the Managing Director and Co-Founder of the boutique investment and financial group Asiasons Capital Group. Now, Jared, you have also been reported to be saying that you're in currently active discussions with several Malaysian companies that you might want to invest in, right? I know you can't name names, but can you give some insights as to which sectors, which areas?
Yeah, well, for obvious reasons, we can't disclose the names. But we are talking to quite a number of companies in the consumer space. A number of them are in F&B, of which we have a pretty strong presence in Malaysia. And yes, we're very excited about it.
Okay. Now, 5 years ago when you founded Asiasons with Dato' Azlan Hashim and Ng Teck Wah, the focus was on starting a private equity firm with a very local flavor. I think that's the thrust, and in consumers as well. But you're coming out at a time when there are a plethora of boutique investment firms, and those that we already know of, and there are many, the Navises of this world, we've had them recently, the Bina Fikirs, the Kendall Court, Capital Partners, and people like that, and so on and so forth. Again, I mean, in terms of competing for deals, in terms of competing for capital, where are the road bumps?
Well, the good news is the big picture is, despite the global financial crisis, it is looking rosy for Asia and particularly Southeast Asia. So there is a lot more liquidity taking a focus in Southeast Asia. So there isn't really, that tight a competition in terms of that. But what we try and do is, and what we've done over the last 5 years, is really differentiate ourselves as a focused private equity investor, a hands-on, value-added private equity investor that's able to combine brick-and-mortar strategies with design and web strategies to basically build better products and businesses.
Okay, so high net worth capital, as well as with capital from pension funds, would also be within your investors. Now, when you first started and you raised capital, and now, right now, when you're raising capital for Fund 2 of your Dragon Fund, is it easier now that you've done a few deals, or is it a bit more difficult because the economies globally are slowing down?
A little bit of both. It's easier in the sense that we've managed to build a pretty strong track record and build very good relationships with investors and institutions all around the world. And difficult, obviously, because pre-crisis there was a lot more liquidity flowing around, and the liquidity is still there.
When you talk about pre-crisis, pre-GFC is in 2007, or
yes.
Pre-crisis today, as in before the looming crisis?
Pre-07. Yeah,
okay.
Pre-07-08 crisis. And we came about it just at that time. And now post-crisis, there's still liquidity, but everyone's really very careful about where they put their money, and they're very selective. Okay.
Now, on your website, Asiasons, you've talked about how your investment advisory part, your Westcoom Financial Group, your Asiasons WFG, had been ranked the top lead manager between 02 and 05 on the back of deals done and sponsored. And you've actually said to be listed 77 companies, mainly from China on the Singapore Exchange. But the thing is, since then, many of these S-chips have gone awry, as you have talked about. Perhaps because you took a minority position, you couldn't be in there to help run the ship. Now, has that hurt your ability to raise capital, because they might point out to your record in terms of listing S-chips on the Singapore Exchange and say, look, there is where you went pear-shaped, and there is where you went pear-shaped as well?
Well, let's just clear this misconception. WFG, and back then it was known as Westcom. They are the first boutique investment bank in Singapore to really have broken a stranglehold of the large local banks. So what they've done is really admirable, and it was a result of them that led to a slew of other competing boutique banks. And yes, they're known for bringing Chinese companies, but really it's only a third of their track record that's Chinese-based companies. And interestingly, or fortunately for them, all the huge scandals and fiascos, it hasn't been, from their portfolio of clients. So they've tried really a lot harder to try and screen out, and be a lot more selective in terms of.
I mean, generally, when you
flow.
evaluate business plans, when you evaluate the accounts of these S-chips, right? And I'm sure you must come across a lot, because it's said the pipeline in Hong Kong and Shanghai is said to be so fat that they've got to come to the secondary Asian markets, whether it's KL or whether it's Singapore, to list their shares. Again, I mean, shed some light on this. When you look through some accounts, and they typically have a lot of cash in the books, and they have a lot of businesses in what is otherwise a 1.4 billion person market. What are the red lights, the alarm bells that tend to go off in your mind when you see these things, when you see these accounts?
Well, my expertise and focus now isn't really in the investment banking side, but I can share with you what some of the experience that they've come across. But again, I do want to note that the industry has really evolved, and post-crisis, there's a lot less Chinese companies coming into the market in Singapore, especially the smaller ones. And Asiasons WFG is really focused more on regional deal flow, especially in Southeast Asia. But pertaining to their experience with Chinese companies, they have proper screening tests and best practices, and their own formulas to basically try and screen out what they would think as potential red light companies. So, financial matrix, basic financial stuff like, say, booming receivables, seemingly huge amount of cash, but still liquidity strapped. And they even go to the extent of hiring local consultants or research houses in their domestic origin to understand whether or not these are really the players that they claim to be.
Also within this side of the business, you've enlisted the enviable connections of the Cambridge-educated son of Tun Daim Zainuddin, who's Malaysia's former finance minister. He's listed as the chairman of Asiasons WFG, and he brings to the table his family's M&A business activities, of course the resources sector where you're quite focused on, the flagship banking assets, of course, and the alliances associated with it. Again, I mean, just shed some light. What is what is doing business with the son of the former finance minister, and a big rainmaker in Malaysia as well? What does he bring to the table for you?
Yes, bringing in Datuk Wira is a recent development. We've been running Asiasons WFG previously as the majority 51% shareholder, and we felt that because most of us, our partners, we were really focused on private equity, and we really wanted to bring in someone with expertise and could really help us create a lot more value in WFG. And because the whole corporate finance and investment banking scene has changed, and WFG is really evolving from a pure IPO shop into more an M&A or investment banking type of business model. We felt we really needed someone with Datuk Wira's broad reach and expertise to help us build this business.
So people like him, people like Datuk Wira Daim, and people like Datuk Azlan Hashim, would they be door openers? Would they be capital obtainers? Would they be originators of ideas, or more of all of the above?
Well, given their vast network, they obviously help us open doors and give us ideas. But I think it's much more than that. They have very, very deep experience in investing. particularly for Dato' Arslan, given his background and the various,
As the chairman of the Malaysian Stock Exchange.
Yes, his tenure as the exchange chairman, and now in various government entities.
Khazanah, for example.
Yes, he brings to the table a very different, very different kind of opinion, and he's able to give us a much more macro outlook, and that really helps complement what we do.
Now, in terms of some of the portfolio investments that you've made, Chaswood, we've had Andrew Reddy in here recently. You've also done things like High Five, which is a kids show essentially. So they're quite diverse. And you've also done EMS, which is an exhibition organizer, but not just any exhibitions. They'll do dinosaur shows and specialist exhibitions. Which of your deals are the most interesting in terms of financial upside going forward?
Oh, the financial upside for all these companies are all interesting, and that's why we take such great pains to screen through hundreds of investment opportunities, and finally we narrow down to these few. So we're all hoping for, we all have targets of multi-baggers of 5x or 10x for every one of these in investment deals that we do. But if you're talking about in terms of interest, consumer in itself, everyone can relate to, just by its nature of the fact that we ourselves are consumers. And the last two investments that we've made using our Fund 2 to make it, which is in EMS Holdings, the interactive entertainment exhibition company, and more recently High Five, which we announced yesterday, are very, very interesting, investments that we've made.
Okay, now the other part which is also interesting is that you're married to Dian Lee, the daughter of the Country Heights entrepreneur Tan Sri Lee Kim Yew. I'm sure you must have a lot of personal interactions with him. But do you all talk shop? And if you all do talk shop, what kind of shop what shape and form does it take?
Yes, we talk shop all the time. Majority of the time is really, he's a very family-focused man, and he's very big on Chinese values and Chinese ideals. So there's really a lot to learn from him in that aspect. But in addition to that, he's quite an amazing and unique entrepreneur, and we're always sharing ideas. And the bigger the zanier, the better.
Okay, because he is obviously a ground-up entrepreneur, whereas you guys come in there and you come with a lot of structure. When you all do talk shop, are there any scope for deals to be done, for example? Of course, Clearwater is the entity that Dian is involved in. It's a boutique property developer, of which you are the chairman, Jared. Again, things like that. I mean, is there any commonalities or doing business in future?
Well, I'm non-executive, so I'm involved purely, as more as a husband than anything else. My main and full focus really is on Asiasons, and because our fund is really a very structured fund with very structured investment type parameters, we obviously try not to mix that up with the family side of things. Okay,
and lastly, I mean, when you talk about getting a 5x or a 10x bagger with your investees, are you referring to the public markets, for example, or are you talking about a trade sale? What's your expertise there?
Well, the end result, the end objective of what we want is really to realize the investment and bring back cash to the table to distribute to our investors. So when we talk about 5x or 10x, it's after everything is said and done, whether or not it's listed first or just go straight into a trade sale, it's the cash that we get to be able to return to our investors.
Okay, well, historically you've done, you've exited via listings. Of course, now the markets are quite weak. We've seen Singapore being scrapped off, F1 and Graph Diamonds, for example, and Manchester United, which is apparently going back to the US now. Does that throw a spanner in the works for you guys?
It's definitely a lot weaker, but definitely very weak for the much larger mega deals. So if you're trying to raise the few billion-dollar IPOs, I think it's going to be pretty tough. With the exception of Malaysia, that's been able to do it. I think even throughout the world, it is a pretty tough situation.
Interestingly, I mean, very quickly, because we've run out of time, but why has Malaysia done so well? I mean, Malaysia in terms of IPO destinations is number one in the world today, bigger than everybody. Why?
Well, Malaysia has a lot of domestic liquidity that's kept domestically. So there's all this capital that's that's looking to invest in deals in Malaysia. And these few that's coming out in Malaysia are very, very attractive deals. So
well, domestically, in 6 months' time, when the moratorium is lifted and they can actually do sell, I mean, that's when the true price comes out. Is that something that investors generally should be concerned about?
I think the few listings in Malaysia have a lot of growth potential. So we are hopeful.
Okay, well, Jared, we can go on ad infinitum about the deals that are being done in the pipeline, but we've run out of time. So, again, thank you for your time and good luck with your plans and investments going forward.
Thank you for having me.
We were talking to Datuk Jared Lim, the Managing Director and Co-Founder of the Singapore-listed boutique investment and financial group, Asiasons Capital, BFM 89.9.
BFM 89.9, the business station.